I remember not too long ago when the Federal Reserve cut rates and 30-year fixed rates over there, they were teetering at about 5.99. Seems like a long time ago, but that was just a week ago. The Federal Reserve cut rates. Every day since those things have been going up. So what is today's 30-year fixed rate? Well, it depends on what you're looking at. So I'm going to go over this every day this week until you guys understand where the 30-year fixed rate is, because if you look at this, it gets a little confusing. Okay, so let's draw into this. If you're watching this video, most likely you're looking to buy a home or maybe looking to refinance. I'd love to help you in both those situations. I'm actually a federally licensed mortgage loan officer. Means I'm licensed in all 50 states as well as Puerto Rico. I have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. I'll give you that information at the end. First, I need you to understand what these are. So the easiest way to do this is let's jump up to the 15-year fixed, just so I can kind of help you guys understand where mortgage rates are. Okay, so here's where mortgage rates are. Well, let's go to the 30-year fixed. It's easier to understand because it's over here. So here's the 30-year fixed. The first one we're seeing here is MND, Mortgage News Daily. Their 30-year fixed today is 6.28. Fantastic. That's pretty good. It's almost 5.99. Well, heck, Zillow, look over here. Zillow has 5.99 for today. Bank rate, they're just a little bit, well, they're right in between. So which one would you go with? Well, I'd call Zillow, but before you do that, you have to understand these things. So what's the big difference there? Well, all those are marketing. Okay, so like, for example, Mortgage News Daily, you need a 780 credit score, put down 25%. What is Zillow's? I don't know. The concept here is, you guys, it's really hard to figure out what the rates are today. And that's why each day I come in and hopefully help explain to you guys what's going on with these and the whys behind it. So let's get over to what we're looking at today. Here's the economic calendar for today. The only thing we got was right through here, the manufacturing numbers. You're going to say, Dan, who cares? Well, this is really important. If you look at the manufacturing PMI over there, it's below 50. What that means is our manufacturing is starting to contract. I think it's the 5th or 6th time that this has happened over the last few series. So that's not good for our economy. The good news here is prices. Prices paid, they're down. They were at 61, now they're at 58. I mean, prices are coming down. So, okay, how's that all blend into what's going on in the economy, what's going on in the markets, and what's going on with rates? Let's get over to here. Here's what happened today in the bond market. So this is what mortgage rates did today. This is looks more like a stock chart than a bond chart. Usually the bond market's pretty stable. Okay, today it was seesawed all over the place. Why? We have federal officials, they're talking all over the place. So let's get over to CNBC and let's see what the Fed officials are now saying. But the bad news I have is the Fed official we have here in Chicago, Goolsbee, he's usually always saying rates need to come down, rates need to come down. Now he's saying maybe there isn't going to be a December cut. Well, let's see what the rest of them are saying. So let's go to CNBC and see what they have to say with this.
Now to the Fed and what investors should expect from the central bank. We've been talking about the Fed all morning. Senior economics reporter Steve Leisman joins us with the latest. Hey, Steve.
Hey, good morning, Andrew. Friday brought out a chorus of Fed hawks and some doves, with communication sounding increasingly chaotic. Beth Hammack from Cleveland, Lori Logan from Dallas, Jeffrey Schmidt from Kansas City, all three opposed that October cut and cast doubt on whether they would support a December reduction. Only Schmidt is the voter there now. Their basic argument: the economy has plenty of momentum. Inflation is running above target. Schmidt says it's spreading, and there's no signs of tight Fed policy anywhere in the markets. Meanwhile, Fed Governor Waller, a leading contender for Fed chair, and Governor Stephen Myron, on loan from the Fed to the Fed from the Trump administration, both spoke in favor of further cuts, while Powell said the Fed would slow down in the fog. Waller responded in an interview, "The fog doesn't tell you to pull over to the side of the road," advocating there for a December cut. And Myron, who has now dissented twice in favor of 50 base point rate cuts, said the U.S. risks recession if the Fed doesn't cut. Lots of Fed speakers this week. I count 11 of the 19 Fed members talking. Not all of them talking directly about the economy or monetary policy, but it seems like sometimes they've been stepping out of their regularly scheduled topic and making some comments about it. So just about every day this week, there's somebody talking. Wednesday, though, maybe the most important day of all. We get the ADP data, and many Fed observers think it's going to take definitive jobs data either way to bring the committee together in order to cut rates. Andrew?
So that's what the markets are waiting for. They're like, okay, heck with the tariffs right now. We want the jobs reports numbers. So how are they going to come in? Okay, there's one or two outcomes. There's two outcomes. One, let's say the jobs data comes in good, saying the jobs are looking okay. There's actually starting to uptick and things aren't looking bad. So what's going to happen? Well, the Federal Reserve will pause. They'll say, well, inflation's still running way above target, and now we don't have to worry about the jobs report. So, okay, that's one outcome. The other outcome is we get the data, and the data is worse than expected. So then what would the Federal Reserve do? They're saying, okay, we know inflation is up there because of tariffs, but this jobs numbers, that's where we really got to put our focus in on. And they said that at the last meeting. So how's these numbers going to come in? I don't know. And that's why subscribe down there. Every time I post a video, you'll get an alert and you can see what actually is happening. If you're a homeowner right now and you're trying to track rates, and remember, a week ago, rates were about 0.25% lower. Did you take advantage of it? Did you refinance? Let me know down there below. Okay, but if you haven't, I got a tool for you over here. If you go to the rate update, that's our website right through here. If you're a homeowner, got a RateWatch tool right through here. What this gives you the opportunity is to let me know at what rate you would like to refinance. When it hits there, I'll call you and we'll go through the numbers. I'll email you. If it makes sense, we'll look at doing the numbers. We'll lock in and get the paperwork started. But where's rates going to go? Please comment down below. But here's a chart I want to show you guys. This is what they call the dot plot. Okay, what the dot plot is actually where the Federal Reserve, the members of the Federal Reserve, they actually put a dot on where they think they're going to put the rates for that year. So here's what the dot plot looks like. 2025, this is Federal Reserve's officials, and if you watched that video, Steve Leisman said the Schmidt guy, he was the only one that was able to vote. So they had 3 people on the chart, but only one had voting rights, and probably only one had put a dot plot up here. So here's what this is. If you see here, this is the year, 2025. You go over through here, this is where they expect the federal funds rate to be. Okay, most of them right now are saying it's going to be between 3.5 to 3.75. So where is it now? Well, let's get over to this right through here. It's 3.75 to 4. Well, that means most of them expected another 0.25% cut, and the last meeting is in December. Well, here's the problem that we face right now. If you go over to this, well, right through here, in 36 days, the Federal Reserve, they're going to meet, and hopefully by then the government is reopened, because I think just hunches it's going to be resolved this week. But what are they going to do at the next meeting? Well, this number's changing quite a bit. If you go down through here, the probabilities of a Federal Reserve rate cut at the December meeting, it was like 95%, and just a week ago. What is it today? 65%. That's why the market's doing what it's doing, because they're like, we don't know what's going to happen. We know inflation's up there, and the Federal Reserve, they're kind of okay with it as long as the jobs market is deteriorating. And why is all this important? Well, this is really the reason why the Federal Reserve was created. They have 2 mandates, meaning they were created to solve 2 problems. One was the jobs numbers. Anything under 5% on this, the unemployment rate, is a full jobs market. Now they're saying, okay, over here on the inflation numbers, we'll accept the inflation numbers at 2.7. Yeah, it's over the 2% we want, but this is what they're really looking at. So if this number comes in good, the Fed isn't going to cut. If this number comes in bad, they're going to cut. But more and more the Fed officials are saying, we're going to be a little more cautious than we were in the past. That's what's making the markets do what they're doing. So that is it for today, folks. That's my closing bell. If you're out there looking to buy a house, check out this program. You can't beat this thing. It'll give you up to $7,000 if you're looking to buy. So I won't give you the parameters behind it. If you want to check it out, click that video right through there. But if you really want to find out who I am, what I do, and we have that slogan, 1 application, 1 credit pool, we're going to compare your loan to over 30 different lenders. What do we do? So let me tell you a little bit about what I do. I'm actually federally licensed, meaning I'm licensed in all 50 states as well as Puerto Rico. So if you're out there, I'd love to help you. But the unique thing is this. We're set up with over 30 other lenders. Here's what's cool. We can use their rates, their programs, and you'll use me during this whole process. You want to check it out? Get involved. Right above my head, you can give us a call at 844-775-5626. Ask me a question. Right above my head says Ask Dan. Click it or schedule an appointment with us. Right through here. Request an appointment. We really don't want you putting in your application. We want to know a little bit about you, and I'm sure you want to know a little bit about us, especially how we compare your loan with over 30 different lenders to assure you're getting the best rates, and you're also trying to figure out and understand, Dan, what's going on with those and why. So hopefully today you learned a little bit more. So if you did, all I ask you to do is go ahead and subscribe over there. We're trying to get to 40,000 subscribers. We're 400 short. Can you help me get there? Hope so. Thanks for watching, folks. I'll be back tomorrow morning and let you know what the opening bell is, what the information's coming down the pike, and when the heck's going to go on with these and why. Can't wait to see you tomorrow, folks. Need some help? Reach out to us. We'd love to help. See you then. Bye-bye.